If you're on the ICT journey and you feel like you understand the concepts, but your trading still isn't producing the results that you desire, it's probably not because you're bad at trading. The truth is, most ICT traders make the same few mistakes. Mistakes that don't quite look like mistakes, but they quietly keep you stuck. And trust me, I know this firsthand because I've been trading ICT for over 9 years now. And only this year I've only had my first ever 6-figure year, and I've gone through the same mistakes. And I wish someone, when I was early on in my journey, would have just came to me and be like, hey buddy, look, stop repeating these same mistakes because this is what's quietly killing you. And that's why in this video, I'm going to be that person I wish I had to you, to tell you, hey, stop doing these 3 things because it's hurting you. So you can stop self-sabotaging and actually get to success with ICT concepts much faster. So be sure to stick around and watch this video all the way through to the end if you're serious about changing the trajectory of your trading. Alright, so the first mistake is probably the most important mistake to be aware of out of all the 3 mistakes I'm going to share with you in this video. And the reason why I say that is because once you see and once I reveal all the 3 mistakes to you, it's going to make sense because the first one kind of brings them all together and gives you that aha moment that you need. And the first mistake, guys, is the need to be right. I don't know what it is with ICT traders, but they feel the need to be right, and it just defeats the whole point of trading ICT concepts. Think about this, right? And I guess it kind of makes sense because obviously ICT concepts are probably one of the most, if not the most highest forms of technical analysis there is, right? So it kind of makes sense that ICT traders feel the need to be right. Because think about how many times you've done this, and I know you've done this because think about this, right? You've done your technical analysis, you've gone through the market, beautiful, sound logic, sound everything. You've done your high time frame, you've gone down to the lower time frame, you have your model of how you're going to engage in price, you have your anticipation of where price should go to before it reacts. But then this is where you trip up, and I know you've done this because I've done this as well. You demand that price does nothing less than what you've outlined, and obviously that's built into the idea that I'm using ICT concepts and they should work all the time, right? So my analysis needs to be right. I need to be right. I can't expect or demand nothing less from price. But that's actually the opposite of what ICT concepts and what that whole ICT thing is, guys, because ICT concepts are built around logic and are built around narrative. So the moment you start demanding that price does exactly what you've outlined it to do, that's when you actually hurt yourself and you actually hurt your success and you actually hurt your profitability as an ICT trader. Because what that does is that it changes the relationship dynamic between you and the market. And what do I mean by this? You got to think about this, right? ICT concepts are built around logic and narrative. That's what makes them work. It's the narrative and the logic behind why the concepts do what they do. So if you're demanding that price has to do that, and price is then not showing you that it's doing that, price is feeding you back that, okay, I'm doing this, maybe you're wrong. But because you're demanding it to be right, you're going to be so blinded by your own analysis because you believe in the concept so well and you believe in the concept so much that you're not going to be paying attention to the feedback that price is actually giving you. And then this is what turns you from then being a trader that can predict price to be a trader that now starts thinking, okay, I need to react to price. Instead of responding to price, you then start switching to price. And then what you start doing? You then start chasing that idea. You then start forcing trades. And then when you start forcing trades, what's going to happen? You're going to take a loss, and then you're going to keep forcing trades, and then you're going to tilt, and then you're going to tilt, and then you're going to blow your account, and then you're back in and saying, ah, shit, why did I do that? And then only then when you go back and you look at that trade, you think, oh wait, but price was showing me and telling me this. So it's important when you're trading ICT concept to stop being a reactionary trader and start being responsive to price. You start looking at the market as, okay, the market does this, and if the market does this, I'm going to do this. Okay, the market didn't do this, so by virtue of not doing this and by doing that, then I will do this. So do you see that you start then being fluid with price? You don't just stay fixed on one thing, and that's what's essential to be able to read price action. And the quicker you guys can adopt this mindset of being fluid with price and being responsive is going to make the biggest difference, because that's what's hurting you, because you then start fixating on an idea and then you blow up. And trust me, I've been there. I've blown so many accounts from this whole concept. So guys, stop doing that because it's not serving you. So stop doing that and stay in control, because the quicker you can stay in control, the quicker you can then actually be able to adapt in different situations and different things that the market throws at you. And this brings me on to the next point, the need to marry bias. And you see how it's kind of linked to the last point? You have an idea of what price is going to do, right? And you won't budge. And It's so funny because I'm literally just thinking back to myself right now when I first started trading ICT concepts, right? I used to do this thing, right? I'd be like, okay, price is gonna attack those equal highs. Price would literally take me out, have a completely change of direction, violate an order block, violate the complete structure of how the day's looking, and I'd be like, no, that's a turtle suit. Price is gonna go back. So what would I do? I'd enter again and I'd be like, yes, price has to do this. And this idea of just being married to a bias and not being able to switch, it's okay to adapt, and it's okay to be like, okay, yes, I took an L. Let me revisit my plan. Okay, what was my process? What was I looking for? It's this idea of that when you marry a bias, you move away from your process as a trader. The only thing you can fall on as a trader when you're day trading, guys, is your process. It's process over everything. That's what's going to keep you alive through the hard times that are going to come in trading. It's how you apply yourself within the market. And the moment you start marrying ideas and start marrying biases, and I know I know you know exactly what I'm talking about because I know you do it. So stop doing it. Stop marrying biases. Be able to adapt within the market. If the market is doing something, say, okay, cool. Look at your process. What do you do? What do you look for? If price is not showing you, that's the logic again. That's the logic within the market. Look at the logic behind the concepts. If the concepts are not doing what they're supposed to be doing, if price is supposed to be bullish and price is showing you that it keeps violating bullish PD arrays, evaluate your process. Go back to your process and evaluate how you engage with price. Okay, price is not showing me this anymore, so that means I need to go back and see, okay, what do I need to adapt? What do I need to do? Because the craziest thing is that sometimes you can be wrong about the direction and right about the trade, and just by virtue of you being able to apply your process properly, you can even sometimes be able to take a winning trade on a wrong idea. The process is the only thing that removes the emotions from your trading. It's the only thing that separates the emotions and the trader. It's the only thing that keeps the trader in control. It's the process, because that's the thing, because these markets, it can get dark, bro. It can get dark. Sometimes you can be in the charts and you can just black out. And I know you've done this before, because I've done so many times. I'll be trading and now I've been such a loss because I'm marrying my idea, I'm marrying my bias, and I'm just like, no, this has to happen. And you go into this trance. I don't know, it's weird. It's like the market's just got this woo thing, bro, that just like sort of like hypnotizes you, and you just black out, and it takes you blowing the account because you can't keep going. That's when you're like, but shit, what was I doing? Like, what was I actually doing there? Like, I can't even remember how I was trading, because you stepped away from your process. And that brings one to the last mistake that I see a lot of ICT traders make these days, and it's just like, why are you doing this? Like, do you understand that this defeats the whole essence of ICT concepts? Because the thing that you're ignoring is what brings it all together and is what allows you to be able to execute on the lower time frame with confidence and with high probability, which is most of you guys anyways only focus on the lower time frame. And the reason why that's bad, because it creates an element of unfocused lower time frame execution, which then leads to you guys being lost on the lower time frames, right? Because think about this. If the only thing that you ever do is just focus on a 5 minute or 1 minute chart, you're going to see a break in market structure and you're going to think, oh yeah, that's a break in market structure, I need to see it. You're going to see a trade above and you think, oh yeah, this is a turtle, so I want to sell. Just because you're ignoring the idea of that, you need to focus on the high time frame first, and then you need to bring that high time frame perspective onto the lower time frame. Then you can execute based on that high time frame idea. And what that does, guys, is it filters out the noise of the lower time frame, because yes, it's good to trade these lower time frames, but if you go in without a high time frame perspective, you're going to be so responsive to everything that's happening, because you don't have blinders, you don't have a focus on what you're supposed to be doing. As an IC trader, bias first. And I don't know why a lot of you guys, you run away from bias, you run away from the high time frame, because it just seems like it's too much to understand. It doesn't have to be confusing. Bias is probably one of the most easiest things to understand. You probably already understand it, you just don't know you understand it. In fact, I did a whole video on bias and explaining this exact logic of how you already know bias, you just don't know that you know it. So I'm going to link the video right here. After this video, go watch that, and it's just going to make bias make so much sense for you. If you feel like you can't do bias on the high time frame, because bias just helps you, brings things together. It helps you build the narrative that you need with ICT concepts. Because if you're not trading with narrative and a high time frame perspective, it takes away from the essence of, okay, the concepts are supposed to be doing this on the lower time frame. I'm gonna act in this way because the high time frame is drawing to here. Why do you think IC says smart money operates on the high time frame? So start looking and breaking down your charts from the high time frame. Stick to the daily chart. It's probably one of the best time frames to trade on in terms of building a bias from, because if you can figure out the daily chart and if you can figure out the direction of the daily chart, You don't even need to really figure out what the daily bias is anymore, because each daily candle is a day's worth of trading. So if you can predict the next daily candle, how it's going to print, you've just given yourself the bias for that day. You've just given yourself that quote unquote daily bias. Don't run away from the higher time frame. Bring that in, and it's going to allow you to filter out the noise that's on the lower time frame. Because if you're bullish on the high time frame, if you're bullish on the daily, you're going to know that every move below a low, when we're trading, day trading, right, because you have a high time frame bullish perspective, is going to be a liquidity sweep. Every bullish market structure shift to the upside is actually going to be a market structure shift to the upside to continue the trend as price draws higher. So just start looking at the daily time frame, guys. So be sure to go watch that video, because I do break the daily chart down, and I do break down bias, because you already know, you just need to get in your head that, okay, this is how I operate and this is what I need to do on the daily chart. And the quicker you can do that, is the quicker you're going to find success in ICT trading. The quicker you're going to be able to read price better, and you're just going to see that it's going to allow you to just excel in your understanding of price, because now you're one with price. Now you have what I call market fluidity. You're not looking at the market from a fixed place. You're looking at the market from a fluid space, and that just allows you to be able to make decisions, be able to accept when you're wrong. And that's the key to having success of ICT concepts. And you might be thinking, oh, Joe, but what if I don't know how a fair value gap works? What if I don't know what a liquidity sweep is? Well, great for you. I'm going to link a playlist at the end of this video. I really highly recommend you go watch that. It's my 25 Days of Christmas playlist, where I'm breaking down ICT concepts and showing you how to apply them in real-time trading, and how they should be applied, and the logic behind them, and why they work, how to pick the right fair value gap. All that good stuff I'm going to put in a playlist at the end of this video. Go check that out. Whatever you're confused with, I'll have an answer for you in that video. It's just going to give you that much more clarity. I really hope you guys found value in this video. If you did, leave a like and let me know in the comments below what you found valuable in this video. Let me know as well what you're struggling with as an ICT trader, so hopefully I can make a video around it to help answer those questions, to help alleviate those problems for you. Subscribe if you find value in this channel, because I do make ICT concept videos every week. And yeah, I just want to help you guys improve and become a successful ICT trader so much faster, because I've made a shit ton of mistakes in my journey, in my 9 years of doing this, and I know you guys can get there so much faster than I did. So yeah, subscribe and join the Telegram. It's free. It's a free Telegram. I'll post all sorts of cool shit, and now free analysis, free analysis, and all that shit. And yeah, guys, like, comment, subscribe, and I'll see you guys in the next video.